watch the recordings like we kind of
Okay, super.
Okay.
Want to go ahead?
Okay, yeah. Welcome.
For background, again, Stevens Plowman, I'm founder of Bayard Business Capital and Consulting. I formed this business, maybe 6 years ago after stepping down from F&M Bank and Trust as CEO there for about 27 years. Our company's got 8 associates, and we're a straight commercial loan brokering type operation. We work with about 30 different lenders. Most of them are banks there in the St. Louis market. John asked me to talk first about the situation with the SBA and what's been in the major media recently with both the EIDL and the PPP program. But before that, to kind of back up and talk about the really big picture, you know, the Treasury Department put in 3 different programs to bring the economy back. And the big program is for companies that have over 15,000 employees, and they can float bonds that will be bought directly by the U.S. Treasury. So that's what's there for the big firms. The middle market firms are between 500 employees and 15,000 employees, and there's a specialized program through the Federal Reserve that will actually work through the banks, and they have special terms and conditions for businesses that have been hurt by the virus. And then we work our way down to the SBA programs, which are for 1 to 500 employees. So the grand strategy was a pretty nice idea, and then of course everything gets lost in the details. The program with the SBA is really a U.S. Treasury Department program that is flowing through the SBA. So all the terms and conditions, although they're going to be enforced by the SBA, they're what the U.S. Treasury has set for them to work with. And the SBA is really getting beat up bad by the media right now. And I'm a person who could spend a lot of time telling you horror stories about the SBA. But, you know, before this happened, normally the SBA administrates about $30 billion a year. And under this program with the U.S. Treasury, it's about $615 billion. So they've had to administrate a program that's 20 times their normal size. So the comparison would be, if you today own 5 single-family investment properties, in about a 35-day period, you would have gone out and bought 100 more. So now you've owned 105. So try to think of it that way when you think of what's happened to the SBA and why they're just simply overrun. The 2 basic programs they have to bring back the economy for smaller business is the EIDL and then the PPP. The EIDL, which is Economic Injury Disaster Loan, I think that's what it stands for, is a loan that is being administrated through the SBA department that handles all economic disasters. So if you'd been in an area that either had flooding or tornado, it's the same type of program, except this is for economic damages. Businesses apply directly through the SBA portal for it. This is a loan that they expect to be paid back. There are personal guarantees, there's collateral, and I think the interest rate is 3%. When they set up this program, they're expecting to have between 300,000 and 500,000 applications. At this time, they've had 4 million applications. So again, you go back to, you know, they're just simply overwhelmed with what's going on. And this program, the PPP program has been pretty successful. The EIDL program really has been a mess. We have multiple clients that applied for the EIDL the very first day it was announced. They've never heard from the SBA. One, haven't heard in denial, haven't heard an approval. We've had clients that have applied 20 days ago. Never heard from the SBA, but suddenly there's $150,000 literally in their checking account that has been deposited by the SBA. They haven't signed any loan papers, but they've got money in their account. Most of our clients that we work with have been getting denial letters. And they get a letter in the mail. The letter is literally already 30 days old when they receive it on the date. And they're being denied. It's a form letter that says that we don't see where you've had an economic negative impact. But the clients haven't, in other words, the SBA didn't ask them to submit anything such as a tax return or a financial statement that would have shown that there was economic damage. So that they're just turning them down. And we have other clients that are just getting money. So literally the EIDL program is almost like winning the lottery. They have something like 3 million applications they're still processing. And we have several clients that we are protesting the denial and trying to work back through it. We have no idea if we're going to be successful. So that's the EIDL program. The PPP program, Paycheck Protection Program, which is the one I think has received most of the media attention recently, has actually been pretty successful. The program was supposed to keep employers from laying off employees. It was not supposed to be something to ride in and save the company from financial ruin. They wanted to keep the employees still hired in those companies. So again, this is a program now that goes through the banks, not directly to the SBA. You need to contact a direct lender, which the vast majority of banks in St. Louis are. You fill out your application, the documentation normally showing what your payroll has been. It's submitted to the SBA. The SBA approves it, and you're funded within 24 hours. Under these loans, 75% of the funds must be used for payroll if you are going to ask for the loan to be forgiven. The other 25% can be used for rent or utilities. There's a lot of political pressure right now to change that and allow more of the funds to be used for normal working capital purposes. But until Congress can come together and agree upon that, it's going to stay at the 75%. So after receiving your funding, you have 8.5 weeks to use it, which time then you can also apply for forgiveness. And again, that's an application you get from your lender. You submit it to them. It's going to document that you've spent 75% of the funds on payroll and 25% on either rent or utilities. If the funds are not forgiven, you're going to end up with a loan at 1%. The first 6 months are completely deferred, and then it's a 2-year period. So really, you end up with a 2.5-year loan on those. There've been vast majority of those have gotten funded. This is the portfolio that was some $614 billion approved by Congress. As of yesterday, the SBA reported they still had $130 billion more to fund, and it was going out at about a rate of $1 billion a day. So there's no reason to get nervous that those funds are going to run out. The original rules that were set in place that those were supposed to be approved on a first come, first served basis. The SBA has tried to stay at that underwriting procedure, but there's also pressure in Congress now to have the banks change that and approve these SBA loans on the most needed basis. And the banks are like, well, we can't decide who's the most needed in this situation. We just want to do it on a first come, first served basis. and it's not too sure politically where that's going to come out. The PPP program is not intended as a normal loan. There's no personal guarantees. There's no collateral. And again, we think the vast majority of the people who have taken these out will get the amounts forgiven. We also suspect the political pressure will build so that the terms become even more lenient and make it easier still for those loans to be forgiven. Both of these loans are for businesses, not for real estate investments. At the same time, too, if you don't have a good economic climate right now, it's going to actually affect, obviously, the real estate itself in the general market. So the other thing I was going to talk a little bit about was just the condition right now of the banks in the St. Louis community. And the banks are so much stronger right now as compared to 2008. They're almost totally different types of organizations. All the banks in the St. Louis area are strong, and all the banks that I know of are open for lending. Now, that's not to say that a bank that before this started was willing to make an 80% loan to value maybe is tightening their underwriting, and now they're only going to do 75% loan to value, or previously all of their investment loans were a 1.25 debt service coverage ratio, and now maybe that's gotten pushed up to a 1.35 type level. The challenge is going to be that after the PPP programs are over, and the examiners right now are also encouraging the banks to grant deferments 3 to 6 months. So 6 months from now, if the economy hasn't improved, I do believe you'll start to see lots of banks that will pull out of the market and will quit lending. Or you'll see banks that will lower their lending underwriting requirements to make them so conservative, it's almost the same as pulling out of the market if they're underwriting at a 50% loan to value ratio. The other big lenders that we have, of course, are the non-bank lenders. Nationwide right now, most of the investment loans are really made outside the banking system by the non-bank lenders. So traditionally, a bank would want to make a loan that's A or B credit quality and really not interested in making loans that are in the C credit quality. And these non-bank lenders would make the loans that are in the C credit quality. Almost all of them have pulled out right now. They fund their operations by floating bonds. Most of their bond market is shut down. So there's fewer and fewer lenders that are interested in C credit quality type transactions. And to give you some idea of what's happening for the delinquencies, again, this is nationwide type numbers, but the April numbers were released earlier this week, and right now, 8% of all home mortgage loans are delinquent. Credit cards right now, 3% of all credit cards are delinquent. And to give you an example, April of last year, it was 0.03 of credit cards were delinquent versus 3% now. Automobile loans are almost the same thing. Last year, automobile loans were 0.5 were delinquent, and now they're 3.5 delinquent. So you can see these are tremendous jumps that haven't hit the banking sector yet, and probably will in 3 to 6 months if the economy doesn't pick up dramatically here real quick. What else did I want to? And today, about 2 hours ago, I received the email from the Missouri Department of Economic Development. In Missouri right now, the unemployment as of the end of April was 9.7. and the month before, in March, it was 3.9. So in 1 month, it's gone from 3.9 to 9.7. So there's going to be a lot of economic pain coming. It's probably not what the association members want to hear, but I mean, that's the reality of the situation we're in.
Okay. All right. We got a couple questions here. David Randolph said he won the lottery. He got 150,000, and he was
Congratulations. I mean, seriously, that's great. Can I ask him some questions on this end? My would be, how long did it take between his application to receiving?
Can you unmute yourself there, David? Here you go.
Find the button on it. Can you hear me?
Yes.
Yes, sir.
So it took a long time. I started back around April the 7th, and when it first came out, I wanted the 10 grand, right? Because the
Sure.
was 10 grand. So I moved quick on it because it said that even if you screwed up the application, you got to keep the 10 grand. So I figured I could screw it up or do it right, one of the two. And so it was about April 7th, and what ended up happening was no contact with them. That was the strange part. And then suddenly on April 21st, I had $1,000 for each of the two employees, me and my wife. It's an S corporation. And so they didn't tell me about it. It was May 1st, and my bookkeeper looked at the thing and said, "Where'd this money come from?" And I go, "Oh my gosh, they just ABA'd it right into my account." So there was no word. So April 7th to April 21st, I got the two $1,000 increments. And then I thought, well, let's just sit back and find out of what this loan part actually is with it, kind of thing. I submitted, just to tell you my numbers, that's just one of my businesses, and I don't care about talking about numbers. It was a simple application. And so I submitted gross revenue of $752,000, okay? And I submitted cost of goods, okay, as $500,000. So the 1,000 is fixed, but I guess the 150 is based on some criteria. I don't know what it was, but they had no other questions, no other whatevers. I don't know what you call it. Stipulated.
Did they send you loan papers, or they just put the money in your account?
They didn't put it in the account yet. Okay. I do have to sign loan papers for it, and I haven't decided if I'm going to yet or not.
Well, you win the lottery.
Yeah, basically, because they didn't, they didn't really do. I mean, that's the only numbers that they got. That application was so simple. It was crazy with it and stuff. But I'm trying to decide what to do. I put a question in here about it. Do you remember what I think it's 3.75% interest for 30 years. But I don't think you have to start paying it back for a certain period of time, though. Is that correct, Stevens?
That is correct, but I do not remember how many months you have before you have to start paying it back. For some reason, I'm thinking it's 6 months, but I could very well be wrong on that.
Yeah, because I'm kind of thinking of just going ahead and taking it, and then if it turns out to be the wrong thing, I'll just send it back before the end of the 6 months or something like that.
Well, you won the lottery. Congratulations.
Yeah. So I was in there, but super early. That's the trick.
Yeah.
And stuff. Any other questions? Did you want to ask me anything else, Stevens?
No, I'm good. Thank you.
Okay. I'll mute myself.
Thank you. Okay. And Dwayne wanted to know if you could repeat how many mortgages are delinquent. I think you had a percentage on that, didn't you?
Yeah, I did. Is it 8%? Hold on. Wait a second. Yeah, 8% nationwide of all mortgages are either in a deferral plan or delinquent at this point in time, at the end of April.
Okay. Did you say how many there were last year?
Not on the mortgages, I don't have that number. I had how many on credit cards and auto loans,
Okay.
but I don't have it for mortgages.
Okay. And auto loans, what was the current delinquency on them, Stevens?
For auto loans right now, the current delinquency is 3.5% of all automobile loans in the nation.
Wow. Okay.
Versus 0.5% a year ago.
Wow. Big difference.
Oh yeah, it's unbelievable.
Yeah. Wow.
And another thing that the private mortgage companies, if they've been doing servicing, they've got to forward 4 months of mortgage payments to the Freddie Macs and the Fannie Maes of the world. So if these private companies don't have that kind of liquidity, they're going to go out of business too. You're going to see a real contraction in the mortgage industry.
Mm-hmm. Well, I would imagine that's opportunities for some and disasters for others.
Exactly.
Mm-hmm. Yeah. How would you say you compare this to 2008 as far as the banking industry goes?
Well, again, the banking industry is a lot stronger simply because the regulatory authorities have required them to carry more capital.
Mm-hmm.
So going into it, the banks are stronger. At the same time, too, this has happened so much quicker than 08 happened.
Mm-hmm.
I mean, at my bank itself, we didn't start feeling impacts of this for nearly 2 years after 08. It took that long for our customers to start really have our commercial customers to get into financial difficulties, where this is happening in a matter of months.
Mm-hmm.
And so really this is unprecedented for community banking to have this happen this quick. I've talked to multiple banks in the area, and they may have as much as 10% of their entire loan portfolio on deferments right now.
Wow.
And it's happened in 30, 45 days. Now, the banks have strong capital, they have good liquidity,
Mm-hmm.
They have much more experienced loan officers from 08 that have gone through this before. But those are unbelievable numbers.
Mm-hmm. Yeah, that's huge. Mm. Okay. Do you have any other questions out there? Let's see, you have to. Oh, here we go. Money. Okay, this is from David. In 2010, the unemployment rate was 8%. There were 3,000 foreclosures each month, St. Louis County. With the Fed printing money for the mortgage-backed securities, what do you think will happen with buyers getting loans and being able to keep buying houses so 2008 doesn't happen, I guess, again? Yeah.
Well, in 2010, it was caused by a mortgage collapse.
Mm-hmm.
And this is not caused by a mortgage collapse. And really, the analysis I'm reading, probably the industries that are going to get hurt the most, and I think we all realize this, is the travel industries, which again are not in housing.
Mm-hmm.
Trying to think of the other industries that we all know are going to get very damaged by this. It looks like rental cars, hotels are going to get hurt very, very bad. But again, we're not talking about the housing industry. So the housing industry is kind of like a secondary hit. And I really don't think it's going to be like it was before. We're not having the quote, liar's mortgage, unquote. We're not having the banks and the mortgage companies play with the numbers and falsify the applications and submit them. I mean, you just don't have that going on this time. And that had been going on for 3 or 4 years before it finally collapsed. Now then, I still think there's people out there with too much debt, and there's going to be a lot of problems with a lot of people, but nothing in the housing industry that was like 08. On the commercial side, it's a little different. We're starting to see reports of the commercial office buildings being very worried, and of course the shopping centers. It's going to accelerate the buying over the internet. In addition to which, it's going to accelerate employees working from home, which again may help home values and residential values if suddenly Facebook is saying we're going to have 45,000 employees work at home. Commercial real estate could go down, but that could be a positive influence for residential properties.
Mm-hmm. That's a good point. Yeah, the commercial loans I think would be tough coming up here myself.
Yeah.
It's just an observation from the outside. Any more questions here? I think you did a pretty good job, actually, very good job.
Thank you.
It's back up to date, Stephen. We appreciate that. Does anybody else have any questions here? Okay. Well, and as you know, we recorded this with your okay, so I'll go ahead and get a link up on our website for anyone that couldn't tune in live, if that's okay. And do you have anything else you want to add before we close up here, Stevens?
No, I just hope that we keep opening up everything and we get back to having regular monthly meetings.
Yes, thank you so much. I do too. I'm too busy doing all these home meetings right now. I can't wait to get back to live meetings. So, okay, well, thank you very much. We appreciate everybody tuning in today.
Thank you, John.
Okay, we'll talk soon.